Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and we are going to be speaking with Don Durrett today of goldstockdata.com. We'll have the link in the description area. He's a returning guest, someone who's given us insight on what is happening in precious metals, cycles, and just a glimpse of what is going on in the economy as it pertains to metals and asset prices and just what's going on. I'd be curious to hear his thoughts on, the commodities boom we're seeing, obviously lumber, the dynamics of what's happened with COVID and the fallout, and of course, the trillions of dollars that are being printed into oblivion, finally making mainstream headlines, inflation. And so we're going to talk about that today. Don Durrett, he's the author of How to Invest in Gold and Silver. Don, thanks for coming on the show with me today.
Thanks for having me back, Ken. It's been a while.
So Deutsche Bank warns of the global time bomb coming due to rising inflation. This was a headline that I got offline here, but that was posted about an hour ago. Another CNBC article, wealthy investors are worried about inflation. CNBC millionaire survey shows. I just think it's so interesting. I mean, it seems like that was inevitable, but it's finally moving the conventional needle, if you would. Let's talk about that a little bit. What are your thoughts on this initially?
Well, I think they're not as much worried of inflation as they are worried about their investments, and especially their investments in the stock market. So we've had this 1 year run since March. We're actually going over 1 year now. So we crashed back in March 2020, and now we had this, 1 year plus run. And the stock market, it's not at an all-time high right now, but it's very close. We had a really tiny correction. So we haven't had a really significant correction since September and October, and those were not significant, really. I think they were both less than 10%. Somewhere around 5%. And so those are minor hiccups. So everybody's looking, everybody always thinks in terms of the near term. So, what's going to happen in the near term? And so that's why inflation is, it's like, what is going to be the event that slows things down, if anything's going to slow things down? And so people are looking at inflation. So right now we're the last print was 4% inflation, which is always understated because they don't count everything. So, we're looking at really right now, I would say 5% inflation, and it's probably going to stay somewhere around 4 to 5 for the next few months. And, so Powell said it's transitory. Everybody relax, it's transitory. And basically what he's doing there is he's basically trying to spin, confidence in the market so people keep buying the market. It's fascinating. So the Fed has basically been supporting the stock market since the last recession, 2007-8. And if you look, every time the stock market since 2008 it has gone down, they've injected liquidity to pop it back up. So they're propping up the stock market. And so this whole transitory thing, it's basically trying to keep the stock market up. And they haven't bought stocks yet, but they will. They'll do this. We're in, this is kind of crazy land. Everything's manipulated. They're going to, buy bonds and probably do YCC, yield curve control. But I think that I think we're transitioning right now. 2020, 2021 was basically the transition point for the United States economy to no longer be basically the dominant economic system. So I think we're transitioning away from dominance. And so I think the stock market, I think we're going to start basically as going into a stagflation kind of era that'll probably last a while, 3, 5, 7 years, where the US economy basically doesn't do anything but, kind of stuck in the mud. I don't think we're going to crash. I think we'll have, basically the banks are not going to loan any money. So that's going to be really tough to get a lot of inflation. You got to inflation. You have to have a lot of velocity of money, and that we're not going to have that. But now we have this shortage of workers right now, which could cause wage inflation. So that could keep inflation up. But you also have a lot of deflationary pressure. We have a lot of debts that are basically going to go nowhere. I mean, it's a fascinating period of history.
Hmm. Yeah, it's an interesting dynamic for sure. I'd like to get your nuance on what we're seeing regarding inflation. Could the case be made that because of all this money that's been printed, we're going to continue to see higher asset prices in general equities and real estate, because that money needs a home, and therefore it goes to things like stocks and real estate and gold and silver as well.
Yeah, and everybody has their opinion, and it's hard to predict that outcome. And you're exactly right. I mean, I read where the US dollar's money supply has increased 30% over, I think, the last year. Yeah, it's a lot of money going in. So in theory, people are thinking, yeah, we're just going to keep seeing housing prices go higher and higher and stock prices go higher and higher. I'm not in that camp because I back to this transitionary thing. I think that money's going to come out of the U.S. Economy, going to come out of the stock market. Foreign money is going to come out because of this recognition that the U.S. economy is basically kind of turning into a very stagnant economy like Europe and like Japan. It's interesting. We kind of borrowed MMT from Japan, and now we're turning into Japan with this very slow sluggishness. And so I'm not in the camp of this melt up, the stock market keep going. I think we're going to correct here, and I think this melt up is over. So I'm not in that camp of, inflation in assets. I actually think we're going to have a deflation in assets. I think this is a housing bubble that's going to kind of go down. I don't know how much. I'm expecting at least 10%, could go down 20. But after it goes down, I expect it to stay down. And one of the reasons why is I just think the economy is going to be weak. People are not going to have money to not only buy houses, but they're not going to have money to rent houses. So I actually think we're going into an era where people have to live together to basically, make ends meet, pay the rent.
Wow.
The rents have gotten so high. So I actually see weakness in real estate coming up, weakness in assets. I think the bond market is going to get bloody, if you will, because I think interest rates are going to go higher, and it's going to create a lot of fear around bonds because you can lose money when interest rates go higher. So I think all asset classes are actually going to take a hit here over the next 2, 3, 4, 5 years because of this transition I'm talking about. This is historic. I mean, I think when I say transition, I think that Southeast Asia is now going to be the growth center of the world's economy. And so they're going to be the growth center. The economics really kind of has huge impacts on, throughout the globe. So I am not, I'm bullish on technology, but I'm not bullish on the U.S. economy, say, for the next 5 years. I'm very, very negative. I think we're transitioning to something new. I don't know what that new thing, I don't know how strong the economy is going to be, but this COVID thing has really given us a bit of an insight into the American psyche is around work. You notice how nobody wants to work, right? So I think that mentality is going to kind of stick with us, our culture, where we don't have this, the American economy. And I think the millennials have a lot to do with this, about, this balance of work life, home life. I think people want more of a balance, and they're basically willing to work less, and they don't want to, work, 40, 50, 60 hours a week. I think that's part of this transition as well. That's a whole different topic.
Yeah, it's definitely a difficult thing to predict. I mean, I would not have predicted sky high real estate and just everything we've seen in the way that it happened. But I did expect inflation. And so to that degree, I was invested properly. Having said that, it's one of those things, though. I feel like as the middle class and the poor continue to be hurt, I feel like they're just going to continue to send checks. And so on a very practical level, those checks are going to go to paying the rent, paying the mortgages, keeping things moving along instead of things coming to a grinding halt. And as long as they keep doing that, it's hard to imagine asset prices, at least in my opinion, coming down. And in a sense, it's supporting the wealthy people. It's because all that money goes to keeping asset prices high, which the top 1%, everybody, the people that everyone loves to hate, the billionaires, and I mean that's what they own. And instead of allowing COVID to flush everything out and bankruptcies to take place and everything that should happen in a correction, none of that happened. So I guess that's just my last point on that, just to kind of come full circle with it and just to kind of get your thoughts on that, because that's where my mind is at. I really believe, and it's just my instinct, that we're going to see things go higher because of support of the middle class and poor, inching that group of people along for the indefinite future.
Yeah, I think there's a lot of people in your camp that have that expectation. I think, and one of the reasons why I don't expect asset prices to keep melting up, stock and housing, is because I perceive that the U.S. is going to have a hard time with what you just mentioned about UBI, Universal Basic Income, about basically keeping stimulus checks going. This comes to MMT, which I'm very negative on. So modern monetary theory, the whole idea that debt doesn't matter anymore. The only thing that really matters is liquidity. So as long as you inject money and you prevent any type of a liquidity incident, you can have as much debt as you want. That's the whole concept behind MMT. And now Washington has embraced it. Both parties have embraced it. The Republicans, they're pushing back a little bit, but any type of a crisis, they're ready to write a check. And the Treasury Department, I mean, what Mnuchin did a couple of years ago, I think it was actually a year ago, when he basically injected money via the Fed without going through Congress, that was mind-blowing. It was like, now it shows you that the government can basically, the Fed can print as much money as they want. So they can work in tandem with the Treasury. So MMT is here, it's not going away, but it kind of backs up your argument that as long as they keep expanding the money supply, the assets have to go higher. And in theory, logically, it looks like that is what will happen. But I'm a contrarian in that. I actually think that MMT is, you can't basically print prosperity. You can't have more debt and more inflation. So if you combine the inflation rate with the debt rate, if you're not paying off that debt with more wealth generation, you're falling behind. So America is falling behind. So you could say that inflation is the reason why the assets are going higher, but you still have to have some underpinning of wealth, which I think we're gonna run into trouble. I feel like I'm not making a strong enough argument here.
No, I definitely agree with that, and I guess nominally, I see things being held up or going higher, but not necessarily from a purchasing power perspective. And I mean, we can just see what's happening with millennials and people who want to buy homes. I mean, sure. Look what happened with real estate. Imagine if you've been on the sidelines and not owning anything during this time, and now you're telling yourself, I need to start a family. I got to buy something, and your average $300,000 house is now $450,000. I mean, my goodness, like that, it's in a year, right? In 18 months, we've seen that. And it's like, with hyperinflation in many ways is here, it's not 4%.
Let me cut you off there. Let me inject an important concept. My main argument here, the reason why I don't think that you're painting a picture that's somewhat rosy for America going forward as far as asset wealth. You're basically painting a picture that assets are going to go higher. And unless inflation really takes off, which I don't think is going to happen, that's a really rosy picture for America. And I don't see that. I see that America is basically, we can back up here. I don't want to give a big historical lesson. People have heard me give these lessons before. But I really feel that the American era and the American economy kind of peaked in the late 1990s. And then when 2001 hit, it basically really impacted America. It basically exposed the American system, the American economic system, as far as relying on globalism, which I think was a mistake, and we're still relying on it today. We have this really, negative trade deficit, which I don't think is going away. So it's basically that whole system, that whole economic globalist system is basically, I don't think it's reached a point where America's now, I talked about this transition point, 2021, where America's going to fall. And so that wealth, that rosy scenario, I just don't see how that's going to last much longer, if it is at all. I think for instance, New York, the capital of the economic financial world, if you will, is going to begin to decline. Now, I'm not talking about a depression in America. I'm just talking about stagnation, decline, a transition. That's what's going to stop this, this American era, all this asset wealth that you're talking about. That's what's going to basically put an end to it or slow it down. Now, I could be wrong, but that's my main theory. So I just wanted to inject that.
Yeah. No, and I appreciate the honesty and the transparency and where your thoughts are leading. I mean, it's insane how what we've seen in our world, and nothing would surprise me. I would have never guessed the world would have looked the way it did in 2020 going into 2021. I mean, my goodness. So nothing is off the table. And I'm not going to pretend like I can predict the future here. I just want to be resilient enough to be able to withstand the casualties of war, because that's how I feel going forward here. It's almost impossible to call everything, to be part of every bull market, and to not either miss opportunities and protect ourselves from every potential landmine. And so, but my goal is to be resilient enough and smart enough to be on the trending up higher side of the equation, if you will. And that's why we have guys like you come on. So, Don, talk to us about precious metals. I mean, we're at the $1,900 level for gold, and a lot of people are talking about that as a very, very important point. I mean, there's a lot of potential resistance at this point, considering it was the 2011 high. We've seen the variation between the 1900 high and the 1050 low. A lot of people are expecting a swift move to $3,000 based on the amount it's moved from its high to low. So, talk to us, if you would, on what your thoughts are surrounding gold.
Well, first of all, I'm definitely going to answer that question. So you mentioned about protecting yourself going forward. So yeah, the three best things I see for protection is the precious metals, cryptos. People always think that's nuts for protection, and real estate. So even though I'm somewhat negative about, I'm expecting a real estate to correct, I'm not expecting it to crash. And real estate, it's a really good place to hide because it basically has a lot of tax benefits. It tends to hold its value like gold does. So those are kind of the three areas of protection. In many respects, it's like real estate shouldn't be allowed. You shouldn't be able to invest in real estate to get rental income because it's such a fantastic way to make money. I mean, it almost should be illegal. It's such a good way to make money. And so many people have made so much, millions and millions on real estate. So I just want to mention that protection wise. And now we'll go to gold and silver. Maybe we'll touch on crypto before this interview is over. So yeah, so I got into gold and silver as a protection, if you will, back in 1990, a long time ago. I started investing in mining stocks, well, juniors in 2004, and then I started my website in 2012. And right now I'm doing full time. So my website, I do that full time now. And it's all about protection. It's an alt investment, yes. It has high risk, it has high reward. But if we have problems, any type of serious issues, the miners are going to do exceptionally well. So it's a really good hedge. Now I'm overweight miners, but I mean, I think that people, if they have 2, 3, 4, 5% in miners to protect themselves, it makes a lot of sense. Now let's look at the pricing about where we're at in the cycle. Gold and silver are always cyclical. They're highly, highly cyclical. And in fact, I think in terms of most of these cycles are once in a generation, and some generations don't even get the cycle. I would say probably every generation gets at least one. But so far, we haven't had, let's look at silver. So you mentioned gold in 1900. We'll look at the resistance points. So silver, if you look at silver's monthly chart going back to 1980, it has the biggest cup and handle you'll ever see. It's the most powerful chart I've ever looked at. Basically, the reason why is because in 1980, we made a run basically straight up to $50 and straight back down. So you basically went way, way up to 1980, then you went all the way down, and then we went back up to $50 in 2011, and now we're going all the way, going back down and creating that handle. So silver has never broken out. We've had these two basically quick runs to 50, but they didn't last. I don't consider those really bull markets. They were just, I don't know, they're basically quick manias, if you will. Those were not, long-term bull markets. They were short-term bull markets, right? So now we're looking at silver doing it again. And this time, I think it's the real deal. So if you look, silver basically crashed in 2011, and it went all the way down to like $6, $7 from 49. I mean, actually that was 2008. I went down. 2008 we went to 6, and then it tried to break through 1850, and it had a hard time. 1850 was a really important strategic level that it couldn't get through. And this is in 2011. So it went from $6, $7 in 2007, 8. And then it went to 1850 in 2010, right around 2011. And then it finally broke through 1850, and it basically ran. It took less than 9 months to go from 1850 to 49. And then it crashed all the way back down. I think it went all the way down to 12 this time. And then it went back to 1850 and got stuck again. And I said, okay, let's look at the chart. So the chart said, and this was last March, it basically said, and we basically had this basing from 2013 all the way to 2019, this channel, this basing, basically right at 1850. So once we got through 1850, there's only two more lines in the sand. It was 27 and 35. Well, 27 is morphed into 30. So you said 29, it's basically 30. But 2850 is really important. We get through 2850, then we basically keep an eye on it. But we start getting excited at 2850, and then it goes through 30. Once it gets through 30, I mentioned that 30-year chart. Once it gets through 30, the last line in the sand is $35. And remember, in 1980 and 2011, it went from 35 to 50 like really, really fast. We're talking 3 months. So there's no resistance from 35 to 50. So what does that mean? Once silver gets to 32, 33, it's going to be like a magnet to 35. It will get to 35 really quickly. And then can 35 hold? No, I just don't see any way it can. So then we're looking at 50. Once you get to 50, are we going to have a repeat of 2011 and 1980, where you went to 50, it only stayed there for less than a month and then crashed? I don't think that's going to happen. So silver right now is set up for this massive run. And if it makes it, and what I'm explaining to you right now is what I expected back in 2004 when I started buying juniors. It just took 17 years to get here. It took a long wait, but looking at the chart, I figured in our lifetime, we're going to have one bull market in gold and silver. And I think this is it. Now, how do you play it? How do you protect yourself? Well, the best way is the producers. If you look at the silver producers, there's not that many. You're only looking at about 10 quality silver producers, about 15 total. And then the gold producers, there's only about 50. So you're looking at about 25 qualities. You're looking at about 50, 60 names. That's it. You can play the ETFs, or you can play you can pick the quality producers, but the producers are going to do really well in a bull market. So the run from $30 to $50 silver is going to be historic. Anybody that's sitting on these silver producers is going to double, triple their money. So that's a beautiful beauty. So now I'm going to answer the gold real quickly. So let's look at gold. So gold, it broke out a year earlier. Silver broke out in July of last year. Gold broke out in 2019 in July, 1 year apart. It was interesting. Now they're breaking out together. So basically gold stalled in August. So did silver. Gold is big brother, silver's little sis. Little sis waits for gold. Little sis follows gold. So in August, you had this pause by gold, and silver said put on the brakes just as well. So silver's waiting for big brother to break out, and they're going to break out together this time. Last time they broke out a year apart. This time they're going to break out together. So silver's not going to go over 30 until gold goes over 2,000. So 1900 isn't really the number you want to look at. It's 1920, 1950. Those are when you start getting excited. So you get excited at silver at 2850. You start getting excited at gold at 1920. And then you got this magnet to 2000, and then it's off to the races. Once gold goes over 2000, silver goes over 30, and we got this bull market of a lifetime. That's the setup.
That's epic. Well, and then in a general sense, and I know we've been talking about metals now for a long time. I've been very bullish throughout the years, knowing what's been going on and how undervalued gold and silver have been. But in light of the fact that we've seen real estate go through the roof and stocks go through the roof, do you have higher targets for gold and silver than, let's say, you would have in 2015 based on how much money has been printed and just like the potential for what could happen to the metals?
Actually, I don't have that expectation because I'm more conservative. A lot of people do have that expectation. People were talking about, $10,000 gold, 10 years ago before this inflation threat. I was always, $3,500 gold is my target. I mean, if we get to $3,500 gold, which is my expectation, the miners are just going to do unbelievable. I mean, you can't count that high. Nobody's expecting the potential. I mean, if you look at the cash flow of these miners or how much money they get paid for an ounce of gold in the ground, you get to $3,500 gold, you're looking at $2,500, $2,200 an ounce free cash flow per ounce. I mean, the numbers are staggering. So I don't really need to look beyond $3,500 gold. Same with silver. I look at silver at 300. That's as high as I need to look. You get higher than that, and it's just funny money. Then you're looking at maybe hyperinflation. But my target has always been 150 on silver and $3,500 on gold. And silver, I just mentioned $300 silver, but that's really higher than really what I'm looking at, what my expectation, how I'm basically planning my stocks, planning my exit points. I'm not depending on $200 silver or $5,000 gold. I'm not depending on that. Most people think $100 silver is insane. But if we get over $50 silver, you're looking at a 100% move to get to $100. It's not that big. Plus with silver, people don't realize how there's less physical silver above ground than there is physical gold, because gold, they don't put it into phones and then destroy the phones. So most of the silver that's been produced over the years is sitting in a landfill, will never be used again. And the dollar value of, let's say, bullion bars above ground is so tiny, it's unbelievable. We talk about 1,000 ounce bars. If you count all the 1,000 ounce bars that are above ground right now on a dollar basis, I mean, you're looking at less than $100 billion. It's ridiculously cheap. I mean, a couple of billionaires could basically buy it, but they can't because it's allocated out to people. And then a lot of it's in warehouses and can't get your hands on it. But the inventory level is so small. So silver, and I preach this all the time. I say it has a lot more risk than gold. Not because it isn't, it is much more explosive. The reason why it has much more risk is because the government and the manufacturers are going to start screaming for regulations once silver gets over 50 and they can't find any. So once you start having shortages, and I think it'll happen right around $50 silver, it'll be hard to find. Right now, the mint's shut down because the mint can't find any silver. And we're not even 30. We're not even in the mania phase yet. Just think when we have a mania phase, you really think you're going to be able to find any silver? No, you're not. So you're going to have shortages. So that's going to push silver, to 100, maybe 150. But I think at a certain time, say the G7 nations basically say, whoa, we need silver for our manufacturers. Now we're seeing like microchips. They basically, people are having trouble finding microchips like to build cars and build different types of.
I know.
So yeah. The next thing that's going to happen, microchips are just an omen of silver shortages. And hey, silver not getting to 50 to me is fantasy. It has to, because basically they're making more stuff with silver. I mean, if you look at how much the last 2 years, if you look at 2020, last year, how much silver investors of the silver, the supply, how much the investors took over 50% of supply last year. Normally it's 25%, 25% is all the supply that the investors want of silver. Last year was over 50%. This year it's over 50%. So all the inventory is shrinking. Your fabricators, they need more than 50% of supply. So that means inventory is shrinking. It's just a matter of time before we see some shortages. So my whole point here is that once silver gets to 75, 100, I think it gets really risky that the governments basically say, whoa, we need to make this a strategic metal and we need to stop them from selling the silver to retailers. So I think the retail trade of bars will basically be stopped. You can buy coins probably, but those will be limited and the prices will be, they'll be out of inventory whenever they come out. But it's going to be interesting to see what happens with silver. It's almost as fascinating as the U.S. economy itself and where it's going.
Yeah. Well, and it's interesting because of what we've gotten used to. I was fortunate to be involved with crypto early, and I know you were as well. Watching what happens to Bitcoin going from 10,000 to 60,000, we have a precedent of something moving in a parabolic sort of way. So, and after we've seen this, it's like silver going from $30 to 50. It's not that exciting, but it would be really exciting to see it going from 30 to 150. Now we're starting to see that sort of move that, hey, multiple times our money, and something that I can, compare to the moves we've seen to a certain degree in crypto. But let's talk about that a little bit. Let's talk about crypto. You've been involved with it for some time. You were seeing Bitcoin come down in a big way, kind of the speculation flush out, and in general, what we've been dealing with. What are your thoughts at the moment?
Well, let's start with Bitcoin. So when Bitcoin the first time that Bitcoin went to, well, initially when Bitcoin came out, I thought it was fantasy. They're going to make digital money and they're going to, outside of the government, decentralized money. I thought this is ridiculous. But and I probably would have stayed in that camp if I wasn't an IT tech guy. So it was in IT for 20 years. Now I'm doing my website full time. So when it went to $1,000, it got my attention. It's like, I'm going, whoa, $1,000. There might be something to this thing. I better research it. So this is 2016. So I did a deep dive. Actually, let me back that up. It went to 1,000. It got my attention. Then it fell back down to 400. And that's when I did my deep dive. So the first time I did a deep dive was 2016, was when Bitcoin was at $400. So I did the deep dive and I start reading about it. And I can't believe what I'm reading. It was stunning to me because I'm a tech guy and I'm going, this thing was designed to survive, number one, and it was designed to appreciate in value. So it comes down to one question. Can it be turned off? And if you're a technology guy and you look at it, you have to come to the conclusion that there's only two things that can turn Bitcoin off. I mean, make it go away. And that is something better than Bitcoin, or Bitcoin itself basically steps on itself and screws up the software. But they haven't done that. As a matter of fact, the devs, through consensus, have done a fantastic job of the technology of keeping it going in the right direction. Yeah, you have these altcoins, these forks, but it's not the same thing, because it doesn't have the decentralization, the strength of decentralization, what I call full decentralization. And people don't understand how powerful that is. That's why everybody calls all these altcoins S coins, because they basically are not the real McCoy. They don't have that combination of security, which decentralization creates, and value and decentralization. It doesn't have those underlying values. So I immediately bought Bitcoin. I'm like, this thing, yeah, I was basically spreading the word, right? 2016, telling people on my website. And then I actually wrote a document on Bitcoin. It's on my website, how Bitcoin works. It's 100 pages long. Explains exactly my reasoning and why I thought it would survive. Then I wrote a couple of articles on Seeking Alpha about Bitcoin. And that was really the only coin I liked at the beginning. And when Ethereum came out, I thought it was an altcoin. I thought it was, not going anywhere. And I just watched it. And
sorry, I couldn't quite hear you. Could you please repeat?
Then I finally took a little deeper look at Ethereum when it was at $200 to see what they were doing, because I thought smart contracts would work. My problem with Ethereum is that a lot of competition. I didn't know who the winner was going to be. And then when DeFi came out, I was like, okay, looks like Ethereum has got first mover, and Ethereum's going to be tough to beat. So I jumped into Ethereum. But none of the other, and again, Ethereum and Bitcoin have nothing in common. This is the one people always try to kind of put them together and say, all cryptos are, basically trash or a scam. But it's all about the use case. So Bitcoin's use case is really strange. It's basically based on one thing, which is survivability. I mean, that's the oddest use case you'll ever hear. That's the reason why everybody hodls. They hodl because they think it's going to survive. And so you buy it, invest it, you hold it. I call it a collectible for that reason. Now, Ethereum is not a collectible in size degree. It's not like Bitcoin. It's not has this full decentralization. In fact, it's not even a cryptocurrency. It's basically a platform, a development platform. And it has all these potentials. What I like about it is it's like Microsoft on steroids, where Microsoft gains value when some company basically builds a side product on Microsoft, and basically it makes Microsoft go up in value. Because you have all these developers that are developing on Ethereum, and whenever they throw their app on Ethereum, the Ethereum product benefits. It's a really good model, but they have to dominate the smart contracts. And there's a lot of competition out there that might replace it. That's generation 2. So Ethereum is generation 2 of the blockchain, which is basically the smart contracts. Now we have generation 3, which is basically scalability. And you have some products that have nothing to do with blockchain, like HBAR and ICP, third generation. So I didn't, Ethereum was my second one. And then I got involved. My third one, I just did. I bought some HBAR and ICP, and people are laughing at me. But I'm in early again. These things are just starting. I got in early on Bitcoin, got in early on Ethereum, so I'm getting in early on these. Now, these two technologies probably will go to zero. They'll probably fail. But they're both basically built on speed. And I think whoever dominates fast transactions, and if one of these two can dominate fast transactions, it could do really well. So it's all about use cases. So I'm in generations 1, 2, and 3 of the crypto, and I expect it to be in generation 4 as well. And again, I mentioned that these are ways to protect yourself. So, it's technology. You're investing in technology. Look at in the 1990s, how all those technology companies did. The Facebooks, well, they came after, but the Microsoft, Google's, Amazon's.
All right, Don. Well, it was an exciting call, and man, I look forward to following up with you on how things are going to happen here and play out. And I'm really excited about silver. I'm super excited about gold, and I'm heavily invested there. I really believe this is an area to be over allocated, and if you are going to be over allocated, if people want to learn more about you, the work you do, where can they go, and what can they expect to find?
Before I say that, I just wanted to mention one thing. I'm expecting a correction in the stock market. So people are, going loading up right now. I think we've basically been on a run since October. Haven't had a correction since October. You look at the chart, it's been straight up 9 months. I think we're going to get a correction here, anywhere from 5 to 20%. Some people are saying deeper. So I just want everybody to give a heads up here. If you're buying stocks right now, be a little defensive. Be ready for this dip that's coming. I've been waiting for the dip since January. Okay, so where to find me? Goldstockdata.com. So if you own any mining stocks, definitely come check it out. It's a fantastic place to monitor your portfolio. You'll see what I mean. You check it out. It has a lot of value, if you will. And then follow me on Twitter, Don Durrett. That's my handle, Don Durrett, Twitter. And then check out my book if you own any miners or you want to own any miners. It's basically a textbook. It's a good read. And thanks for having me on, Ken.
Don, thank you so much for your time. Appreciate you and your insight on the markets. We're very grateful for you sharing that with us today.
Very good.